Hey guys, in today's video we'll show you our top quality multi-time frame analysis that no one talks about. So stay tuned. But before we continue, we also want to note that we have a Telegram channel as well, where we post signals and other top quality educational content. So here's $1 weekly time frame. And as you can see, nothing literally changed from the past week, as we are still in the given consolidation between the monthly effective resistance and the daily effective support level, from which price bounces back over and over again. And this week we see the exactly given picture. So bulls tried to break right through that monthly effective resistance but failed, causing this long wick to form. And again, we are in a range where price have been for the past 4 weeks. This actually means that we could easily go into both direction, long and short, if we see some good price action near our effective levels. So let's go down to the daily time frame. So here's daily, and as you can see, price tried to push right through the effective monthly resistance, and we even have the candle which closed right above that level, but next day the price has failed to stay above that level, and bears take their control and pushed price back in the given consolidation between our effective levels. And then we have some trend continuation to the downside. So again, we have around 200 pips consolidation, at which we could easily go into long and short trades, as we have very valid consolidation between our effective levels. So let's go down to the 4-hour time frame to discuss more specific trade ideas. So here on the 4-hour time frame, we could clearly see the breakout below the monthly level, right here, then some kind of price choppiness, pull back to that level with beautiful price action, and then massive bearish engulfing candle breaking right through the 50 EMA as well, giving for us a short-term bearish bias on the given pair within this range. So we could easily jump into the short and catch some minimal trend continuation movement. To discuss our specific idea more in depth, let's go down to the 1-hour time frame. So here's 1-hour time frame, and before we continue, we also need to take into account our minor round number support level, which now becomes resistance. As you can see right here, 1.18 round number, which is respected by the price in the past a lot of times. So we have it. And as you can see recently, on Friday, the price broke out on that level with massive bearish engulfing candle with good momentum, showing that this breakout is actually true. And what we have now. Right here we have the same price action like it was in the 4-hour time frame. We have a shrinking candle showing momentum loss at the key level and some kind of price choppiness, which all tell us of the bullish weakness. So to profit from the given situation, we also need to draw the Fibonacci. So as you can see right here. And the ideal situation would be to see a pullback right to the given area, to our golden zone, and where the 50 EMA are lining up as well. But pullback right to the round number level, right to our minor resistance, is also good. Anyway, to confirm our immediate trend, we as always need to draw this trend line right here. And once we see a breakout of it, we need to go short and simply target our daily effective support level, which comes right here at 117. And then we also would like to see some kind of price action at this key effective support level, and there is the high probability for price to bounce back right from that level to the bullish direction. But again, once price reaches this level, we would like to closely monitor it to identify a good trade opportunities. So let's move on to the pound dollar. So here's pound dollar, and as you can see, we have the same picture like in the EURUSD. So we had a beautiful uptrend, then 2 weeks in a minor consolidation, and again we have a react to our key monthly effective resistance level with a long wick candle, which literally means that the bulls tried to break right through that level but failed, causing this wick to form. And again, price stuck in the consolidation between two effective levels, monthly effective resistance and weekly effective support level. And like in the EURUSD, we have indecision bias on the weekly time frame for the given pair. So let's go down to the daily. So here's daily, and the last 4 candles you could see a simple institutions battle for the key monthly level. As you can see, all these candles almost the same and occur near the key effective monthly resistance level, which again creates this level more valid as it is respected from the institutional traders as well. Through these 4 candles, as you can see, green, red, with almost the same size, meaning for us the same institutions behavior and the same institutions volumes. So as you can see right here, have no good trade idea presenting itself. So let's go down to the 4-hour time frame to see a clear picture. So here on the 4-hour time frame, we could see an early sign of a possible trend exhaustion right here, so this lower high. And then we have also a breakout of the 50 EMA with this massive bullish engulfing candle right here. But again, you should take into account that we have a consolidation range as well. As you can see right here, we have our consolidation range. For now, we could adjust it even to our recent swing highs. And so to confirm our immediate trend as bearish, we at least need to see a breakout right through our minor support, which is the bottom of the consolidation as well. So as always, we need to closely monitor the given area for the possible breakout or reversal. And as you can see, we have the round number right here, 130. We have the round number as well, which could act for us as an additional confluence factor in terms of our directional bias. So for now, we have a massive bearish momentum. So there's beautiful 3 red candles, which is why we have a small candle, then a big candle, which shows for us momentum gain. And then some price sharpness making the pullback. So for now we expect a downside direction right to our minor support level. And then we would like to see a clear price action. If the price bounces back, we could go up. If we see breakout, then we would like to see some rejection of the 50 EMA or our broken round number level or our golden Fibonacci zone to go short and target our weekly effective support level. So let's move on. So here's dollar CAD with the time frame, and as you can see, we finally have a breakout of our weekly trend line, which confirms our bearish bias on the higher time frame for the given pair. As you can see, we broke this level with an OK candle, and our next target could be the next obvious level, which comes right here at 130. So we have a bearish bias on the given pair for the coming week. So let's go down to the lower time frame to discuss more specific trade ideas. So here's daily, and as you can see, we have a classic scenario of the breakout. We have a breakout, then a minimal consolidation, which means position accumulation from the all big players, and then we could easily expect a trend continuation to the downside. So let's go down to the 4-hour time frame, as we have a bearish bias on the daily time frame for the given pair as well. So here's USDCAD 4-hour time frame, and we need to take into account the following confluence factors. As you can see, first we need to break the trend line right here, which would act for us as an additional confluence factor. So as you can see right here, price touched our trend line in the recent time and proceeded down. We could use a Fibonacci tool. We could draw our Fibonacci from the recent swing high to the recent swing low right here, and we did not see a clear rejection of our golden zone. So in this situation, we could not use a Fibonacci tool as an additional confluence factor. So let's delete this. And as you can see, we also have a beautiful 50 EMA rejection before price go down. So we could use a 1-hour time frame for a better entry as well. Let's do this. So here's 1-hour time frame, and we could see minor resistance right at this zone and in this zone. So to confirm our immediate trend as bearish, and to do not trap into the sharpness price action, we would like to identify our fresh immediate trend. To do this, let's draw a trend line, as always. As you can see, we could draw our immediate trend line right here. And once we see a breakout, we could easily go short right here and target, first of all, our round number, 130, 131. And then price could proceed it down to the 130 as well, like we discussed on the weekly time frame. So let's move on. So here's gold, and we didn't see some crazy movements this week on this pair. Again, price as told in the consolidation. We have an indecision candle. We could also notice that we have greater wick in the upside direction, which simply means for us that bears was just stronger this week, creating this bigger wick. But anyway, we is told in the consolidation, meaning for us indecision. So let's go down to the daily. So here's on the daily, we could see some important things as well. So first, let's draw the trend line from this point to this point. So boom, we have 3 touches in total. Let's adjust it. Okay, so second, we could note that we have a lower high as well, which simply means a momentum loss. And as you can see, what is more importantly, we have 2 green candles and then 1 red candle, which is greater than previous 2, which is a very powerful price action ignored by 99% of traders, which also shows for us a momentum loss. And as you can see, we have already 2 bearish confluence factors creating for us a bearish bias on the given pair. But again, we need a confirmation through the breakout of our monthly effective support, our daily trend line, and our daily 50 EMA. And if this happens, we could easily expect a further trend continuation to the downside. So let's go down to the 4-hour time frame. So again, 4-hour time frame, actually the same picture. Lower high, breakout of the 50 EMA with heavy momentum, and then further downside movement. And then price choppiness at our key monthly effective support level. So again, we would like to closely monitor the given area where the trend line, where the daily 50 EMA, and the monthly effective support level are lining up. This is a very powerful zone from which price could potentially reverse or break right through it and go down. So let's move on. So here's US oil weekly time. As you can see, absolutely nothing changed from our previous weekly analysis. So if you want to learn our vision and our ideas for the given pair, just go down below in the description and see our previous weekly forecast video where we discussed it. Because again, as you can see, we have a range where the price traded our weekly effective resistance level and the weekly 50 EMA, which act for the price as resistance as well. So we have consolidation right near these levels and price choppiness, meaning the indecision and non-momentum from the both sides, bullish and bearish. So let's go down to the 4-hour time frame. So here's 4-hour time frame. In the bullish scenario, very clear, and we do not discuss it, as we need to see a clear breakout through the weekly 50 EMA and through the weekly effective resistance level. But again, we could also catch some minimal movements, some immediate trend to the downside, right in this situation. So to do this, we need to just put a trend line somewhere right here. And if the price will break this trend line, with beautiful bearish engulfing, like this candle, we could easily target the bottom of our trend line. So we could easily expect a trend continuation movement right to the 39.36 level. So guys, thanks for watching. Subscribe to our Telegram channel, subscribe to our YouTube channel. We'll be back on track from the next week. A lot of free content will come, so press the like button, subscribe to our channels, leave the comment, and thanks for watching. See you on the next video.